Hey traders, this is Blake Morrow with Traders Summit, and we are with Jim Welsh of Macro Tides. And Jim, it's nice to talk to you again. It's always great to have your views, especially coming off a big event like we did this week with the ECB, also with the FOMC next week and Jackson Hole in a few weeks. So I want to ask you, with the change in rhetoric from the ECB this week, has that changed your view on how the euro should be trading or how they're approaching the market? What are your thoughts there?
Well, the main thing I'm looking at, Blake, is the dollar index, which obviously, since it's 57% comprised of the euro, they're kind of like cousins, right? And I think the dollar hit a high in January of 2017, a low in February of 88. No, it was at 88. In 2018,
yeah,
and then we rebounded up to highs last March, and then we've pulled back. We got down to about the low 89 area. I think that completed a big correction in the dollar, and I was looking for a low, and the rally that we have seen over the last 5-6 weeks, to me, adds confirmation that we have in fact seen an important low. On a short-term basis, the dollar looks like it's near a short-term high. I'm looking for it to pull back to 91.50 to 9100. So what that implies to me is that the euro is going to get a bounce, but after the dollar has this pullback over the next 2 to 4 weeks, I think it's going to climb and get above 95 and make a move toward 100 by early next year. That implies that the euro is going to get a bounce in the short term, but I think it's going to subsequently trend lower.
That's interesting that you say that. So nothing that the ECB said this week really alters your view as far as, maybe the euro should be weaker, the dollar would be stronger.
No, I think the key driver is going to be more that, like it or not, the people are going to perceive that the Fed is going to be kicking and screaming, dragged toward first tapering and announcing that in the next few months. And then ultimately, if I'm right about inflation, and especially core inflation holding up at a higher level than they're maybe going to be comfortable with, the markets are going to start to anticipate that the Fed will raise rates sometime in 2022 as opposed to 23. I think that's one of the reasons why the dollar is likely to, have legs over the next 6 to 12 months.
All right, that's another topic that I want to save for the next conversation to have with you, because I do think inflation, obviously the hot topic right now. But let's talk about the Fed. We got the FOMC decision next week.
Right.
Are they going to start to hint to the market that they're leaning towards tapering? Have you started penciling in any dates that you're like, we're going to start seeing a certain taper, towards the end of the year? What's your ideas there?
Well, I think if you look at the composition of the voters this time right now, because you have 5 Fed presidents that rotate, with New York always being there. So you have 4 Fed presidents from various districts, and the ones that are on there now are more accommodative. All right. So the internal bias of the voters is to drag their feet. They also have the Delta variant, which is being played out fairly significantly. And I'm not on that page. I think there's a difference between what's happening now than last January in terms of, we have higher case counts, but hospitalizations so far aren't ramping up like they did then. However, the Fed is definitely going to mention that next Wednesday when Powell does his presentation, that poses a risk to the outlook for the U.S. economy. At the same time, there's a number of non-voting member Fed presidents that I think feel very strongly that we need to move the conversation toward tapering. So I think on one hand, they'll talk about Delta, and at the same time, I think they're going to nudge the ball downfield a little bit in terms of now we are talking about tapering. Remember a few months ago, Powell said, we're not even talking about it. So I think he's going to acknowledge that we are in fact talking about it. And, again, they're going to reiterate that we're waiting for the employment numbers to improve. That's all going to happen, especially as we get past August. So, again, I think in the short term, it's a question of how the markets react to an observation that, yes, the Fed is moving toward tapering. Ultimately, my guess is whenever they announce it, they're not likely to actually begin tapering until January of next year.
All right. Well, that's interesting. So January next year, that's probably when you're penciling in that taper. That's great to hear. So let's one last thing, before I let you go, we got the Fed next week, and then we have the Jackson Hole Symposium. Do you think that's going to be, do you think that's going to be that time that, the Fed sometimes, and I think a lot of the central banks use that venue to really kind of announce to the world what they want to do. And since the Fed is so good at least Powell's Fed, and Yellen's Fed was the same, at telegraphing what they wanted to do, what their actions were going to be. What do you think the outcome there at Jackson Hole is going to be this year?
I don't think there's going to be a grand announcement in all likelihood. Again, we have the Delta variant, so obviously if that is really on the wane by that time, we're going to get the July employment report in the first week of August. If that turns out to be a really, really strong number, that may dictate how much further he pushes the ball down the field. So again, I think it's this nudging process that the Fed has adopted in terms of their forward guidance, in terms of, okay, we're working on, developing a plan for tapering. Yes, we're really talking about it, and we're still talking about it. So I just think that is going to be a continuation of this process. And I think they want to wait to see what kind of job numbers we have in August, which will be the first week of September and so forth. And once we start to see really, healthy job growth, which I think we will, then I think that pace accelerates. And that's why I think ultimately we still wind up with it beginning in January.
All right, Jim. Well, guys and gals, this has been Jim Welsh with Macro Tides. And if you want to get more information about what Jim does, make sure you click the link below, especially if you're on the Traders Summit site. It'll link right back to his website where you can sign up for his newsletter. Jim, I want to thank you for being here. It's always nice hearing your voice. You're like the voice of reason in the market, and the way you kind of put the macro view with your technical view. I think all of us traders really appreciate that. So thanks again for joining us this week.
Hey, great, Blake. You have a wonderful weekend.
You do the same. All right, guys, if you like this video, make sure you give us a thumbs up, subscribe to this channel below so you don't miss any of Jim's great interviews. Thanks, Jim.
Have a good one.
You too.